Hello, everyone. Ben joined by Greg on Thursday, October 24th to give you your midday mayhem. And Greg, these markets were in the dumps for a while, and now here we are. We're kind of coming back. We're getting a little bit of life. What's changed? What's going on?
Well, I mean, the demand story is phenomenal right now for corn. Actually, it's really good for beans too. We've been playing catch up for beans.
Yeah.
You get so far behind, so any amount of demand looks good. And this is, you've seen a shift here recently where we were cheaper than Brazil for a couple of months. Now, I think last week it shifted to Brazil again, but the corn demand is really the big story right now. I mean, another 4 million tons of old and new crops sold today combined, or through last week, I guess. And you just continue to see those sales pile up. It's been a wild ride. We had a 40 or 50 cent rally in corn. You had $1 something in beans. Then we gave most of it back, and now we've gotten half of it back there. And it's like, you have a hard time looking at South America and getting bullish, but you have to look at the demand side of things and watch those spreads. And those spreads are starting to look a little friendlier. They're not bullish, but they're a little more friendly.
Right. And I mean, the spreads are working a little bit better. We are having the demand is the biggest story. We are seeing good flash sales in the morning. That's adding up over time, which is nice. But do you think that's coming in because, I mean, like you said, we had a price advantage. Now we lost that to Brazil. Why are people buying our grain right now? Why is it right now?
I think some of it is a low prices type situation. That definitely helps. You also have an election coming up.
Yeah.
I mean, that's a big situation. It's a big shift. I think there's a lot of concern about the next president, and not to go on any rant or anything like that, but both of them pose problems to the agricultural community. There's a farm bill out there that's kind of floating that could be beneficial, but when you look at what either of these candidates do for trade, we can see the end game, but the short term is probably not the best as far as what it could mean for the next year or two if we really start to push on tariffs or some of these other things. But there are friendly stories out there. It's just the demand is the big one, right?
And I mean, the friendly story a few weeks ago when we were up, at the beginning of this month and September was dryness down in South America. Now they got rains, which that tack on a little bit of fun selling, and that's where you get sub $4 December corn for an hour,
a minute,
yeah.
Or two, yeah.
And then now you get rains down in South America. You got an election in 2 weeks. You got a Fed decision in the middle of November.
Yeah.
And now here we are. Who's going to get in? Right, like you said, both presidents have pros and cons for your eggs. But right now, what our current trade situation is. If you're another country looking to buy grain, you know what it is. All right, yeah, I might not like it, but it could get a lot worse. So let's get it while the getting's good. The prices are fairly low, and you have this demand. So yeah, sure, you get a little bit of a pop, but like you said, that's not necessarily bullish. That's not something that you can expect to continue to see because these sales have been fantastic. Mm-hmm. And with the crop that we have out there right now and the yields that guys are getting, it might not be the upper end of those yield estimates that people were expecting a few months ago.
Yeah, and you saw the funds lighten up, and I think that's the big thing that people aren't talking about as much is if you look at the way the funds were positioned just a month ago or a month and a half, 2 months ago maybe, very, very short on the grains, long on the energies. They lightened up on both. We didn't go long on grains. We didn't necessarily go short on energies, but they lightened up. That's them maybe alleviating some of that risk going into the election cycle. And that's where they kind of sit. And it's like, well, we did get very close. I mean, I would call it a neutral position on corn and beans. And then they came in and beat it up again last week. And they may have done it again this week. We were kind of selling through Tuesday, but I have a feeling that's one of those things where they kind of control things. So you get them coming out of positions. We see a nice rally. We get them kind of lightening back into those positions. Maybe some new shorts coming in, and all of a sudden it's like, okay, we might have an issue. But The big thing right now, obviously we talk about everything here in the US. We know we've got a big crop. It may not be as big as what they think, but the South American thing is still going to be something to watch because right now weather is not the issue that it was a month ago. So if it does shift, that gives us another reason to be friendly. But if not, that we're looking at a record production for soybeans in Brazil. Tack on what Argentina is going to do, roughly 55 million tons. And then on the corn side of things, the big crop of that is the second crop. That comes in February. So that'll be something, if we can maintain some demand right now for corn between now and say February, or even through March or April, we've got a good story on our hands. It's just we get a little weather help.
Exactly. And we don't know what that's going to look like, right? We're finishing up harvest. We'll know numbers here, end of the year, beginning of next year, and then it'll get really dicey. And if you remember at the beginning of this year, we were selling off from December all the way down to the end of February. And Brazil starts planting again. And then we had that rally from February up to May, June timeframe, right? So can we see something similar? Maybe. We have another big crop on our hands. And for us to continue this strength that we see, we need to see phenomenal sales like we have been. So can that stick around? Maybe. Well, let's see what it looks like through the election. But switching over to livestock, I mean, look at the macros, right? You're down the S&P, you've had a tough week. Gold's getting set back. And the reason why I'm saying that in relation to cattle is because if we are headed into a recession, if we are going to be in a recession over the next year or two, can the demand stick around? Because box beef has come up. It's come up from those 4-month lows. It looks good. But the futures really, they kind of hit the high. They hit a new high yesterday, but they were not able to close it.
Yeah, that's an interesting. It's more that like you got a couple of stories or a few stories that are holding the support into that market. You got I mean, even with the Dow being down, 1,000 points, 1,200 points, something like that for the week. The capital are holding firm. They're sideways. Right. And like you said, you made new highs for the move yesterday, but they couldn't hold it. The big thing right now is as you mentioned, with the improvement on wholesale beef or choice and select doing very well. The rebound there after just getting pummeled. You also have cash cattle that's improved by like $3. So yes, it's good. I think the export demand is not necessarily where we'd like it to be. The pork demand got better, then it kind of backed off. But I think that the big thing to watch right now is just with all these things that are kind of supporting us, why aren't we going up and establishing, I guess, maybe a new uptrend? I think that's what it feels like. Yeah,
light air up
here. Yeah, I think maybe it's getting a little thin up here, and I look at we look at the production numbers, and those production numbers, and we say that, I feel like we say this every fall, but the production numbers for next year look really good, and it looks friendly, and I think we've said that for now 3 years. That holds us together too. So even when we saw that sell off a year ago, September, and was it $30 or whatever it was, you still found that support and then made your way back up. We're still talking about 185 to 190, 188, 187, something like that. You're still in the upper echelon of this thing. It's just what can take it the next level, because a lot of what's holding it there is known.
Right.
So that's the tough part up here, and as producers start to look at it, they start to make their look at when they are going to be marketing and all that stuff and trying to figure that out. It's like, these are good prices. Do you do something with it, or is there another leg up? And my concern is like what you were talking about with the economy. If the economy starts to back off, we start to spin into a recession. That could be the tipping point, because those higher price cuts of beef, steaks, whatever, that's going to be the one that's tough to swallow. It's going to be, do we need to do something that's more beef? Do we need to go to the pork side of things, the chicken side of things, and start to kind of ease back on that? I mean, we already know the way things are going with our economy. I mean, the credit card debt being at all-time highs, that's something where people are going to cut back. I mean, you get to these kind of luxury things, and like orange juice being as high as it is, that's one of those things that people may cut back on, and that'll cut you down pretty quick.
I mean, everyone's been talking about a recession for a long time. So, I mean, it's bound to happen. It's a cycle. Not saying it will, and not saying it's going to happen next year or the year after. But when you're hitting all-time highs like you have been, there's going to be something that might come into play that you might not be expecting. And, you know, we had an interest rate cut last month. Mortgage rates didn't really fluctuate that much. Housing prices are still high. Are we going to see another cut in a few weeks? We'll see. And that might help out the cattle market. But again, you're kind of feeding the bull the same stuff you've been feeding it, and you're running out of gas. Yeah. You need to see some new story come in. And at this point, a new story, what sounds like to me, might not be a friendly story that comes in for the cattle.
Yeah, and you have to go back and why are we cutting rates? There's a lot of times we're cutting rates to stave off some sort of an issue. That's a little concerning too. Yeah, well, in one hand, yes, it could be supportive, but in the other hand, what are we trying to avoid? Because that could be the other side of it that really makes this thing.
You're trying to pump up the economy, you're cutting rates, make it a little bit easier to lend money. And if you're in an economy that's an all-time high, what are you, what do we need to?
Nervous about?
Yeah. Why are we trying to slow this down? Or why are we trying to speed it up? Yeah. So if you guys have any questions, give us a call. Greg, thank you for being here. We're available anytime. 1-800-2-MARKET. That's 1-800-262-7538. Or check us out online at Allendale Hub. Thank you for watching. We'll talk to you guys next week. Have a good one.